So picking up from where we left off, we're going to be looking at the smaller time frame implementation of Wyckoff and smart money concepts. Recapping, we've looked at what Wyckoff is, and we went through the illustration of the cycle. So when accumulation occurs, we have the markup, then distribution, and the markdown. We looked at the schematics, 4 of them to be exact. So the first one of accumulation. In this scenario, we have the spring, as you can see here, going below the ST level in phase B. Second accumulation schematic. In this scenario, we do not have the spring. We do have the LPS formed here. And just as I've annotated, this is where you want to use a lower time frame study in that area to get your entries or to observe price. In distribution, first one, we have the U tab here going above the upthrust, and then we have the markdown after that. In the second schematic, we react from the upthrust, so we don't create that U-tab, and then the markdown happens from there. So going into it, for this example, I've chosen GBP/USD. Could be looking at a 3-hour point of interest. So following price, just looking at what we've done here, we've been trading lower. So take it from this point here, just for the sake of observation. We sell down, price retraces. We trace into the 61.8 region to 88.6, which is where you want to get your entries from, ideally, in those nice discount price points. And then price then creates a low, breaking or going below the previous low. So likewise, you can anticipate for price to retrace to a point, taking our fib out again. So typically, I personally like to look at price in the region from 61.8 to 88.6. But in this scenario, price doesn't reach that point. So for the sake of this video, we're just going to observe what happens. So from the top again, as we've made a low, breaking below the previous low, anticipating where price could retrace to, 2 points of interest stand out to me. So this last up candle here before the bearish continuation, and this candle here as well. So as you can see, price reacted from this area. So that's what we're going to be looking for. So now, as far as small time frame goes, I look at the 1 hour below. So bigger time frames would be from 2 hour, 3 hour, 4 hour daily. Smaller time frames, I use the 1 hour below. So your 5 minute, your 3 minute, 30 minutes, 15 minutes, and occasionally 45 minutes. So this is the 3 hour. I'm going to highlight this as the point of interest area. Then going to go down to the 1 hour to observe what price did. So getting a clearer picture of what's going on, I can see in that point of interest area, we have an imbalance here. Gonna add that imbalance filter right there. So in this area here, we have an imbalance, and this is where price retraces to. And just taking our fib, seen as we have this. I'm gonna take my fib from this price point, go down. So we can see that 61.8 levels right here, and price comes in between that region from 61.8 to 88.6, which is where we like to look at price for discount price entries. So moving forward, on the 1 hour, we can see much clearer there was a balance right here that was filled. Now, typically, when price is approaching my point of interest area. I observe it on the 5-minute. So here we go. So on the 5-minute, I highlighted already this place. So this would be the low before price starts approaching this price point. So using the Wyckoff schematic, off the top of my head, PS level is the level that I mark out before price starts going sideways as far as distribution is concerned, or accumulation. But in this case, this is a distribution schematic we're looking at. So I'm marking the PS level right here. Reason being, from this low here, price pushes up here. We start moving sideways here. But at this point, we aren't really in the points of interest area. So I don't watch my Wyckoff from that point. But once we get to the point of interest area here, so where the imbalance was on the 3-hour time frame, that is when I start marking out my Wyckoff. So I mark the low right here. This will be the low on the 5-minute time frame. This will be the PS. After price pushes up, this is where we start going sideways from. So I'm gonna highlight this area. Then continue. So we have the BC right here. After the BC, we have the AR. Following that with the ST. And then sign of weakness next, I believe. So I believe I mentioned in the last video, I like to see 2 highs broken for a nice up thrust. So this will be the first high, the ST, second high, the BC. So up thrust looks like this would be the right one. And then the UTAD, we do get a UTAD in this scenario, which should be right here. So that was fairly straightforward and simple. Quite a good example how the distribution played out on the 5-minute when we're approaching a bigger time frame point of interest, which was the 3-hour in this case. Now, observing what price then did after that, after the UTAD, we got our sell down. And then price creates liquidity right here. Got a nice trend line going on there. And then we break below the 5-minute low. So that has confirmed my bearish bias, breaking down below this low. Now looking at where price could retrace to, I want to see where price pushes up from. So it to be here. So this is the lowest point price came to before it started pushing back up again. So what I'm going to do is identify points of interest again where price could retrace to. So first one will be these 2 consecutive up candles before we have the following bearish candles. This trend line right here, price could very well come sweep the liquidity and then flip. We've been through that already. Or just like it did on the 3-hour time frame, sorry, the 1 hour, price could just come fill in this imbalance here as well. I'm change this color here to something else. So on the 5-minute, we've identified 3 points of interest. The liquidity level here, that needs to get swept. The imbalance, and institutional candles, as they call it. I look at the 2 consecutive ones before the bearish move. So I'm going to take my Fibonacci, see where all that plays in from this high to this low, wick to wick is how I do it. And I'm looking anything that falls in between 61.8 to 88.6. So just checking what falls into that area, that liquidity level and the imbalance. And then the IC, institutional candle, is just above it. So I'm going to be looking from the 70.2 level all the way up to here. So what that could look like could then be something like this. So I'm gonna take out this. So this is the point could be looking at for a trade, or a trade idea would be something like this. If I was to be looking for shorts in this scenario, because as we have the UTAD, then we know the LPS follows, and then price starts marking down. So then if you see price came into that area nicely, and since this is a 5-minute, the stop isn't that large. Nice 1 to 2, but then this is a 3-hour time frame we're looking at. So this is a 5-minute setup. A 3-hour time frame will be much bigger than that for the target. Let's see, where was that? Yeah, so for the 3-hour, at least you'll be looking at a lower low below this low. So that then becomes about a 1 to 3. So going back to that, you can see price just missed the imbalance and the IC candle, but it did go above that trend line and into the range of 61.8 to 88.6. So swept the liquidity, and then price continued market down. So that's an example of using small time frame to observe price when approaching a point of interest. And yeah, it's fairly straightforward, simple example, this one. Keep in mind that not every time price approaches a bigger time frame point of interest, you're not always going to get something as relatively straightforward as this. So you just have to adjust and accommodate to what you see.